Reserves and provisions. Reserves. Reserves are amounts set aside in business out of profit and surplus and remains in the capital employed category in business. It will, however, be not used to meet any liability or contingency or diminution in value of asset existing at the date of the balance sheet. Reserves may be classified as revenue reserve and capital reserve. Revenue reserve may be further classified as general reserve, secret reserve, and specific reserve. Now let's take a look at what is capital reserve. Capital reserve is defined as any reserve which cannot be distributed to a firm's shareholders. Created out of capital profits, it is based on those profits that arise on account of premium received while issuing shares, redemption of debentures at a discount, credit balances in the forfeited shares account, profit arising from sale of a fixed asset, and an appreciation in the value of fixed asset. Capital reserve is not created by debiting profit and loss account. It may not be distributed among the company's shareholders. Quite often than not, capital reserve is confused with reserve capital. In reality, capital reserve is built out of capital profits, whereas reserve capital is born out of a portion of subscribed capital, not called up by company, and the company by means of a special resolution has not declared the reserve capital to be called up, except in the event or for the purpose of winding up of a company. So reserve capital is only called up by a company at the time of winding up of a company. And it is definitely different from capital reserve. Now let's take a look at what is revenue reserve. Revenue reserve is not capital reserve and hence is available for distribution as dividends. It's a portion of the net worth or total equity of an enterprise which represents retained earnings available for withdrawal by the proprietor. It may be general reserve, secret reserve, or specific reserve. Now, what is general reserve? It is amount set aside out of profits and accumulated to strengthen the financial position of a company. It is kept in order to increase working capital, which is current asset minus current liabilities, equalize dividends, and to provide for future contingencies. Now, what is specific reserve? Specific reserve is a reserve which is charged against revenue and created for a specific purpose. It has no relation whatsoever with profit and loss account. It is created for compensating a loss or expenditure which is sure to happen at a future date. Now, what is secret reserve? Secret reserve is not disclosed in a balance sheet. It is also known as inner reserve, internal reserve, or hidden. Next, we'll take a look at what is provision, which is explained earlier. So provisions are liabilities whose existence is definite but whose values need to be estimated. Under provisions, we may encounter accrued wages, interest, product warranties, taxes, service contracts, etc. that are explained in a previous lecture. Lastly, we'll see what is an auditor's duty to audit reserves or provisions. The auditor should make sure capital reserves are transferred to capital reserve account, and by way of examination, he should come to a conclusion that capital reserve is the surplus of capital over assets and liabilities. He should also make sure capital reserve is mentioned or shown distinctly in the balance sheet. For general reserve, auditor should make sure adequate provisions exist in a company's article of association. The auditor should also make sure that the reserve is created out of net profits or real net profits and is shown in the balance sheet. The auditor, while evaluating specific reserve, should make sure adequate provisions exist for doubtful debts, contingencies, depreciation, and discount. So that is auditor's duty to audit reserves or provisions and what all things are involved in that. Next, we'll take a look at what is a reserve fund. General reserve is usually invested within the confines of the business itself. But if it is invested outside of a business, it is called reserve fund and will be appearing on the liability side of the balance sheet. What comes on the asset side of the balance sheet in that case is reserve fund investment account. Whether the reserve fund will invest or not is a question of company policy and not something an auditor can answer, and hence its provisioning should be accurately examined by the auditor. Now this completes reserves and provisions.